Casey Clark, you see U.S. stocks in not only record territory, but expensive territory. So what should investors do?
Look, on one hand, you have stocks that are overvalued, right? You have the economy in the late stages of an economic cycle. You have return expectations which are lower than in the past and a higher propensity for volatility. So at one time, you kind of have this heightened anxiety feeling. On the other side, when you look at economic fundamentals, you see a really healthy consumer, low debt service ratio, high net worth, rising wages, healthy employment. So you do have this on one hand, on the other story. So we're recommending neutral weight to equities. We have a pretty big defensive tilt in there to help support volatility going forward.
Are there any bargains out there? And if so, where?
So we don't really like telecom and utilities right now, especially after the run-up in June. And if I had to pick sectors that we'd favor right now, it'd be healthcare and technology. We think there's still some growth that can be had there. We think there's some stability that can be had there. And we also focus a lot on intra-sector valuation dispersion. And I think those areas bode well for security selection.
And you're also wary of fixed income. You suggest underweighting bonds. So if you think stocks are pricey and you want to underweight bonds, where should investors go? Just put it in cash or in the mattress? What should they do?
So this is a really tough environment now. If you think that just the trillions of dollars of bonds trading at negative yields, you think U.S. equity, the treasuries are at negative or at all-time lows. I mean, it's a pretty wild environment right now. So we are underweight fixed income. We recommend investors to take targeted credit opportunities. And with our underweight, we're moving that into alternative strategies that utilize hedging opportunities.
All right, so if U.S. stocks are pricey, what about foreign stocks? One thing that you're recommending is looking over towards Japan. Prime Minister Abe got a vote of confidence recently. We saw the yen weaken. That should help Japan. So how should people play that?
Look, we think that's a really interesting country right now. I mean, let's face it, over the course of the year, those stocks have got beaten up a lot. Up until recently, they're really unfavorable, a lot of negative sentiment in the face, and only really contrarian investors were entering that space. But we do have high hopes for the fiscal stimulus that's about to come, coupled with the monetary stimulus. We think that'll bode well for stocks, and we've seen that over the last 5 to 7 years. We've seen when central banks have come in, particularly with coordination on the fiscal side from the government, that it's bode well for risk assets within the region.
And staying in that region, you're also bullish on the Chinese consumer, right?
Yes. Yeah, we like the Chinese consumer a lot right now. I mean, that's one of the world's biggest consumption stories. And if you look at that, often people look at the benchmarks, which are just dominated by the state-owned enterprises. So we're trying to stay away from the state-owned enterprises, looking at more of the kind of bottoms-up consumption stories over there.
And then finally, we got two big party conventions coming up. So does the U.S. presidential election matter for investors, or should we wait and see what comes out of the conventions?
Look, it doesn't matter. It's fun to talk about. There's little statistical significance between kind of who's elected and economic growth and stock market growth. And on top of that, it's really hard to see what legislation will get put through. You know, what's interesting, we just published some research on this and found that when you look over time, periods where there's political gridlock tended to bode well for S&P 500 returns, which was surprising for us. And then at times when one party controlled the House, the Senate, and Congress with a strong majority, it tended to bode least well for the S&P 500. So we thought that was interesting and said at least gridlock's good, and we see a period of continued political gridlock.
All right, I vote for gridlock. Thanks for coming on.
Thank you.
And thank you for watching The Street.